Hello! In this video lesson, we'll be talking about 3 simple ways to spot a stock market crash. Now, first of all, let us go through some of the problems that traders and investors face. Number 1, traders often say, I don't know when the market will crash. Well, there's a big problem that a lot of people face. For example, during the COVID, this is the 2020 COVID crash, many people were caught surprised and look at how fast the market dropped. And by the time people realize, their portfolio has already taken a massive beating. Well, if people know that the market will crash, of course they'll be selling. But most people were caught in the crash. But there are some people who know and saw the signs that the market is going to crash. So, which brings us to problem number 2, that I don't know the signs of a market crash. You see, in the stock market, there are people who are in the know, and there are the people that don't know. So, the people who are in the know have studied about the stock market, they look at history, they look at past charts, and through their study and look at history, they see repetitive patterns. And yes, there are signs of market crash. Before it crashes, the market often gives you quite a lot of signals. And in this lesson, I'll be giving you 3 very simple methods to discover when the market is about to crash. Which brings us to the third problem a lot of people face is, I don't know when to sell my stock. So, of course, if you know the signs of a market crash, you will know when to sell your stock, and that's what we're going to deal with today. So, what we will learn in this lesson is, number 1, I'll give you 3 powerful tools. Yes, they are simple, but extremely powerful. It will take a little bit of work on your part to understand it, but once you master it, it will help you know when to spot a stock market crash. You also know how to spot a top in stocks and exit the stock before it crashes. And you will also learn the 4 stages of the stock market cycle. Yes, there are 4 stages in the stock market cycle. Just like there's summer, autumn, winter, spring, there are 4 seasons. There are market cycles. So if you know what to do in each season, like what to wear in summer, what to wear in winter, you must also know what to do in each state of the stock market cycle. Now, the third thing I want to show you and teach you is a simple tool. Right? You will learn a simple tool to avoid the market or stock market drops. Okay. So, alright, before we go into the first tool, if you're excited to learn this, please press the like button and click the subscribe button, because I plan to do more videos like this. And please click on the notification bell so that you'll be the first to know when I come out with videos like this. So let's go into first one. Now, one of the most amazing things that I've discovered over the years is the use of trend lines. I'm sure that you have heard about trend lines. Trend lines are actually very simple things. You just connect the lows, as many lows as possible, and you draw a trend line. And they are so simple that actually a lot of people don't use it, but some of the best traders in the world, they do use the trend line. So, sign number 1 before a market crash is when the market drops below a trend line, it is an early warning sign it wants to crash or go down. Okay, so a lot of very good traders, they tend to draw a lot of trend lines. For example, you can connect the lows here to draw a trend line. Okay, and when the market, this is the S&P 500, when the market dropped below a trend line, it is an early warning sign. Well, of course, when the market dropped below this trend line, it didn't crash straight away, but it was an early warning sign. Okay, and then the market dropped and went back up, but you can see that this first trend line here, the market seems to unable to go above and trade above the this trend line. So in a way, it's not a good sign as well. If the stock is healthy, it should be continuous trading above the trend line, but it wasn't able to do so. Now, sometimes we can draw another trend line. The beauty about the market is it's not static, it's moving all the time, and you have to be like a REIT, move with the market and see what it does. You cannot just be standing still. So what some traders will do is that they will redraw a trend line. So what I've done here is to connect the lows here of this one, and form another trend line. So when the stock market, the S&P, dropped below the first trend line, it gave me an early warning. And the second time it dropped below this second trend line, wow, it is a very, very big warning. And you can see that the market actually gapped below this second trend line. And when the market gaps below a trend line, it's usually a very, very bad sign, and things are not very good. And that's what happened. It was, I think, some really bad news. The market just opened lower, and you can see the COVID crash here. This is the COVID crash. Wow, how fast it dropped in just a matter of weeks. And one of the problems that a lot of traders always face is that I know how important trend lines are, but how do I draw a trend line? I'm not very sure how. This is not a trend line lesson. We're just learning it as one of the tools to spot a stock market top. But what I can tell you is, you draw a trend line by connecting it to as many lows as possible. For example, here's a low, here's a low. You connect it. Okay. Now, drawing trend lines are subjective, but you don't need to be perfect. You just need it as a guide. Connect as many lows as possible, and then try to analyze from there. So here's a gem for you. When a stock or index drops below an uptrend line, it warns us that there is a possible change of trend. Okay, just when it drops below this uptrend line here is an early sign, possible trend change. And the moment it drops below the second trend line, well, a very massive shift happened. And look how far the market dropped. If you have saw these signs, you saw it drop here and unable to trade higher, and just here you start to sell, you would have saved yourself a lot of pain. And the moment it drops below the second trend line and you sold off everything, you will have saved yourself from a lot of pain as the market crash. Now, just a little side note, I actually was able to, if I remember, I actually was able to look at the market at that time, and I was able to kind of know that it was going to drop. Now, another problem that a lot of traders face is the market sometimes can change. For example, it goes like this and then it goes up steeper like this. Now the market keeps changing, and you can draw different trend lines, okay, but which one should I use? Well, it's alright, my friends, to redraw your trend lines and keep both on the charts. You need to, don't be one-dimensional trader, be 2, 3, 4-dimensional trader. You want to not be static, because the market keeps on moving. For example, you might have drawn the trend line here, and the moment the US 500 S&P drops below this trend line, well, it works very well. The crash happened. It kind of warned you. But as the market trades higher and it becomes steeper, right, sometimes you can redraw the trend line and have two trend lines on the chart. So what you do is you be very cautious when it drops below the first trend line. It's an early warning sign, and the moment it drops below the second trend line, well, you know something is not very right with the market. And very true, you see, the moment it drops below this trend line, the second trend line, look how the S&P 500 crashed. If you have started to sell everything here, you have avoided a lot of pain here. Of course, there was a double bottom top chart pattern as well. Later we'll deal with this. Now, trend lines are actually very useful, whether it's a uptrend line or a downtrend line. You can see here in the case of Apple, trend lines you don't need to only use it on the stock market. You can actually use it on stocks as well. Here we have can connect the lows here and draw an uptrend line. You can see how Apple shot up all the way here, but when it dropped below this uptrend line, Apple started to fall. Look how far it fell, from about 171 to 134 something. Now if you have let's say you bought the stock here and you ride it all the way up here, and then you see it drop below an uptrend line and you start to sell here, you would have saved yourself a lot of pain. You have booked a lot of profits, and you don't need to go through all this emotional pain. You know, it's very painful for a trader to be able to accurately buy around here, only to write it up, only to see all of it evaporated. So trend lines can help you to overcome this. You know, here's a tip for you. By learning to draw trend lines, you can have a feel for the stock or index even without the need for indicators. You know, we rely a lot on indicators, but if you just learn how to draw trend lines, you can have such a simple, powerful tool. You don't need that much for indicators. It can actually tell you when the stock is going to change trend. Now here's a bonus for you. Look how Apple rose after it broke above a downtrend line. If a stock, when it breaks below an uptrend line, it is a sign of change to downtrend. The opposite happens. We connect a lot of highs here. The moment Apple broke above a downtrend line, it is a warning or signal to us that, hey, the stock is probably changing from downtrend to uptrend, and you can then find ways to enter the stock and ride it higher for the trade. Now, this solves this problem that sometimes we ask ourselves, I don't know when a stock may change from uptrend to downtrend. Now you know, you have a tool. By using the downtrend line, uptrend line, right, you know when the stock might change trend soon. Now, break of trend lines can actually give you an early hint of when the stock may change trend. We look at this stock chart of Facebook Meta Platforms. This is the weekly chart. So here I've drawn the trend line. You connect the lows here. Now many of you may find it difficult to know how to draw a trend line, but with practice, by looking back at this video a few more times and by asking other traders how to draw a trend line, soon you'll become quite good at it. Just remember that trend lines are subjective. You don't need to be perfect, but you need to start drawing trend lines. So here we have this trend line, and Facebook actually crashed here, but before that it dropped below the uptrend line. See, it broke below the uptrend line, then it's drifted down, and eventually collapsed all the way down. And then we can draw a downtrend line here connecting most of the highs, and see Meta actually shot back up after it broke this downtrend line. So it went from a market top to a stage 4 downtrend to a basing and then a stage 2 uptrend. This is called the market cycle. Okay, and at this moment I would like to just pause for a while and go to my website where I want to show you a page about stock market cycles. Alright, this is my website. thestockmarketanalysis.com. I leave a link to it below, and I want you to go to these 4 stages of the stock market. Okay, I'll leave a link to this page later. Here are the stock market cycles and stages you should know, and it's okay, the 4 stock market cycles. So what are the 4 stock market cycles? We have accumulation, markup, distribution, and markdown. And to be able to make money in the market, you need to do the right thing at the right time. And just scroll down here, you can read more all about it. I just want to bring you to this chart. Okay, so this is the chart of the S&P 500 from 1990 to 2013. You can see the explanations here. So we can start with stage 1, which is sideways or basing accumulation. This is the area where smart and wealthy investors buy, the professionals. And then we have stage 2 here, which is an uptrend or bull market. Most people will make money here. Okay, and then we have this market top where it's wide and weepy, the public gets excited and buy, but professionals start to sell. And then we have this stage 4, downtrend or bear market or markdown. It's actually dangerous to buy. So, and then the market trades sideways, a base again, and starts a new uptrend. So what I want to teach you here is that you must always know what to do in each stage of the market. Now that you know there is a stage 1, stage 2, stage 3, stage 4, back to stage 1 and then stage 2. Now for most traders, okay, the best time to make money is during the stage 2 uptrend, okay, where there's a bull market as a markup. Okay, this is a monthly chart, but if you zoom down to daily chart also, always buy when the market is in the stage 2. Best time to buy is during the beginning of stage 2 or the middle of stage 2, not the end of the stage 2. So with that in mind, right, later as we progress through this lesson, you will know how to spot when the market is still in the stage 2 uptrend. So always remember, if you want to buy stocks, long stocks, stage 2 is the best time for you, at best and only time you should be buying the stock. Okay, so I digress a bit, but please take time to read through these 4 stock market cycles. Okay, it's a very good read and it's a very good eye opener. Okay, now that we come back to this chart, a weekly chart of Meta again. So usually when the stock is in a stage 2 uptrend, it is usually above the uptrend line. Okay, when the market is topping, it usually breaks the uptrend line, and when the market is in stage 4 downtrend, it's usually below a downtrend line. So downtrend here, you don't want to be touching the stock. Okay, you want to be touching the stock after it breaks above the downtrend line, such as stage 2 uptrend. Now here's an insight. You now have a simple but effective tool to analyze stocks and the market. A simple tool to warn you when the trend might change. Okay, this is where I'm going to teach you the second tool, the second way to spot stock market top, by using the 20 MA and the 50 MA. So I have with me here the red line and also the blue line. Okay, we are looking at the same Facebook Meta stock weekly chart. So because the market is fractal, doesn't matter whether it's a weekly chart or daily chart or 60-minute chart. The principles that I'm going to teach you with regards to 20 MA and 50 MA are all the same. So the red line is the 20 MA, the blue line is the 50 MA. So here are some principles for you to remember, and the principles are very important. Learn them and for the rest of your life, this will be very, very useful to help you to only buy stocks when they are in a stage 2 uptrend and avoid stocks when the market is topping and in a bear market. So principle number 1 is when the stock is above the 20 MA, stock is considered short-term bullish. So look at here, when the Facebook stock, the Meta, is above the 20 MA, right? Most of the time, right? It was above the 20 MA most of the time here. We consider it to be short-term bullish. If it's a daily chart, okay, it's also the same. The principles are the same. Now, when a stock is below the 20 MA, it's short-term bearish. Okay, here we can see that Facebook dropped below the 20 MA and look how bearish it become. Okay, principle 3 is when stock is above the 50 MA, it's mid-term bearish, mid-term bullish. Sorry, it's a mid-term bullish. Okay, because 50 MA is a longer MA compared to 20 MA. The 20 MA is just an average of 20 period, and you divide it by 20. The computer will calculate and update each week, each day, so you get a moving average. And 50 MA is a longer period moving average, so we consider it to be mid-term bullish. Okay, so when the market is above the 50 MA, look, it's conducive for longs, but the moment it drops below the 50 MA, look, very bad, and then it goes back up and it's good. Okay, when the stock is below the 50 MA, we are consider it to be mid-term bearish. See, when it drops below the 50 MA, how bad it goes. So what you want to do is be very cautious if the stock drops below the 50 MA. I have a separate video on using the 20 MA, right, to help you solve 7 trading problems. I also list it in the description below. But for the purpose of spotting market top in stocks, we're going to focus on the 50 MA here. So be very, very cautious if stock drops below the 50 MA. You can see here, this is the weekly chart of Meta. Just now I draw an uptrend line here. This is an uptrend line. The moment it drops below the uptrend line, this is an early warning. Doesn't mean that when it drops below the uptrend line, everything will crash, everything will fall. No, it's a caution, number 1. And look, it never went back up again. So the stock was not very healthy because it couldn't keep above the uptrend line. Drifted down sideways and broke below the 50 MA. So this was caution number 2. It's going to give you a second warning, you know, that the stock is going to crash. And see, after 2 warning, you can see how far it dropped. It's just amazing how Facebook recovered everything. Alright, so far so good. I hope you have learned a lot. Before we continue, if you've liked what you learned so far, please click a like, smash the like button and click subscribe to my channel, and also click on the notification bell so that you'll be the first one to know when I do another awesome video like this. And here is the S&P 500, the daily chart. Okay, principles are the same. Okay, when the S&P drops below the 50 MA, you can see how nasty the moves are. It just keep going down. Every time go up, it sell off again. But when it was above this uptrend line, yeah, we draw the uptrend line, connect as many lows as possible. This was conducive time for traders to long and buy stocks. Okay, because 75% of stocks, if you remember, follow the direction of the S&P 500 or the Dow or the Nasdaq. So if the market is rising, 75% of stocks will be rising, and it's a very good time for you to buy stocks. Okay, and when it broke below this uptrend line, it was a first warning sign that the market is not going to do very well. And the moment it drops below the 50 MA, yeah, we consider it to be mid-term bearish. Okay, and look, it went to a very nasty period of time for those 2 months. Those who bought stocks here just to see it rise and then suffer another sell-off, bought stocks again just to see it rise and suffer a sharp mini crash here. So it's not a very easy period to trade, and you always want to trade stocks when it's above the uptrend line and above the 50 MA. Okay, that is when you want to find trading candidates in your stock. You can avoid a lot of pain by avoiding this kind of period. So one of the problems that traders face is, I don't know when I should be heavy in the market and when to be out of the market. So I really give you a hint. Be heavy in the market when it's above an uptrend line and above the 50 MA. And don't be in the markets if the S&P 500 breaks an uptrend line and is below the 50 MA. This is not a time to be in the markets, and trust me, you'll save yourself a lot of pain, and your trading account won't be so volatile. You know, there's a right time and right place to do the right thing. In summer, you can go to the beach and swim, but during winter, if you go to the beach and swim, it's going to be very detrimental to have. Same thing in the stock market. Okay, we learn from nature and apply it in the stock market. So here we have a Bitcoin. Okay, these principles work on crypto as well. This is a chart of Bitcoin, daily chart of Bitcoin. You can see it's going up here, but then it broke below the 50 MA. It's a first sign that things are not so good. And then when we connect these lows here, we can form an uptrend line. Second warning sign, it dropped below the uptrend line, and look, it just got all the way down here. And here is another place also. It tries to move up, right? But it fails to do so, drop below the 50 MA. Here's a bearish cross with a 20 MA cross below the 50. I just call it a bearish cross. And look, at this moment, the stock broke an uptrend line. The Bitcoin broke an uptrend line. And this was a very big warning sign that things are not good for Bitcoin. Look how hard it fell. So if you're thinking of bottom fishing Bitcoin while these two warning signs were flashing, right? You're not catching the bottom, and you're actually catching a falling knife. Okay. And how about Alaska Air Group? See, I'm showing you different stocks, even cryptos, and in the market, because the principles are all the same. If it works in one thing, it works in another, because these are instruments and stocks that people trade. It's people that trade Bitcoin, people that trade stock market, people that trade individual stocks. So the psychology of fear and greed is still the same. So we have Alaska Air Group. It kind of go up here. Very nice. Actually, this is a trade setup that I teach, where you buy here, put a stop loss, and then ride it higher. I'll link it below. Is the daily 2050 bullish cross consolidation trading strategy. I'll put a link in the description below. And let's go back to the analysis of Alaska Air here. Here we can draw a first trend line. We connect as many lows. But as I told you earlier, some stocks, or even the market, when there's a final stage where it goes up, it kind of goes up very steep, very parabolic. So you see, this is what makes the stock market exciting. It's not just only following the trend line like this. Sometimes it just parabolically goes up like this, and you need to redraw a trend line, connecting as many lows as possible. So you have the original trend line and then another trend line. So what happens is the stock broke, had a really nasty big bar, two big bearish bars, and then it drops below this uptrend line. Okay, this blue uptrend line, and it was never able to go above. Again, this tells us there's weaknesses. And second thing is the stock gap below another uptrend line, and then it just closed below the 50 MA. So these were warning signs 1, warning signs 2, warning signs 3, that things are not looking good for Alaska Air. So here, gap down below 2 uptrend line and also the 50 MA, it's a very bearish signal. And here's a tip: when you have a stock that goes below the uptrend line and the 50 MA in a single day, you need to beware. So uptrend line and the 50 MA gap down and close below 2 of these signals. It's very, very bearish, and look where the stock went. Wow, all the way from 50s down to 30s. If you have been holding this stock, right, what a terrible period of pain. And if you have seen the warning signs, you could have avoided all this. So now that you've learned a bit, I hope that in the future, with regards to any stock as well, you won't repeat all this again. Now, the tool number 3, the third simple way to spot a market top is you must learn a bit about bearish reversal chart patterns. I'll show you 2 patterns, the double top and the head and shoulders pattern. But if you have time, learn more about bearish reversal chart patterns. I've done a whole video lesson on it, Beginner's Guide to Bearish Reversal Chart Patterns. I'll put a link in the description below. And okay, look here, let's analyze this digital bridge group. This is a weekly chart of this stock. Let's analyze it from what we know first. First is a trend line. We draw this uptrend line, okay, connecting the lows. We drop below a low, first warning sign. Then the 50 MA, it drops below the 50 MA around here. It tried to drop but quickly go back up. Here it just kind of have a battle with the 50 MA, but eventually it dropped. So warning sign number 1, warning sign number 2. Okay, and the third thing is the bearish reversal chart pattern. We have the double top. If you learn a bit about chart pattern, a double top pattern is a bearish reversal chart pattern. So stock goes up, from this double top, it's bearish reversal. So you have 3 warning signs already. Number 1 is break of uptrend line. Sorry, 3 warning signs here. Number 1 is the double top forms. Number 2 is break an uptrend line, and number 3 drops below 50 MA. And look, wow, such a nasty fall all the way here. You could have avoided all this, So the question is, if you have already 3 warning signs flashing, what more warning signs do you want? It's like telling you, yeah, I'm gonna drop. If you ignore the first sign, it's okay. If you ignore the second sign, well, still okay. But when there are 3 warning signs coming and flashing the red lights at you, you should take that sign and really consider selling the stock if you are holding the stock. This is Arch Capital Limited. This is a daily chart of this stock. Look how it went up and it formed a head and shoulders pattern. Head and shoulders pattern is a bearish reversal chart pattern. Okay, when you see it form, it's a sign that the stock wants to go down. And here we have this bearish chart pattern, and then it broke an uptrend line here, and then it dropped below the 50 MA. 3 warning signs, okay, and then look how it crashed down. So never ignore, it's a tip, never ignore 3 warning signs. You can avoid a crash and a drop in the stock, my friends, just by following these 3 simple ways to spot a top. Alright, here we have the S&P 500. It's a daily chart of the S&P 500. I think I showed you this chart just now, but now let's look at it again. We have the S&P 500 break above this uptrend line, and it dropped below the 50 MA, and before that it hinted a top by showing us a double top pattern. So when you have these 3 things all together, it kind of gives you a very good warning signal that the market is about to crash here. See how it just dropped and all the way up to here. So the tip here is to learn as many bearish reversal chart patterns as possible. And yeah, I'm going to put a link to my video below So you can have a look at the video I did on bearish reversal chart patterns. So now here's the insight. You now have the skills to avoid this situation. Imagine you only play stocks here and just stay out. Keep your powder dry, keep your cash in reserve. You have avoided a lot of mistakes and pain. So here is a summary of what you have learned today, and okay, this is what I call three things, three circles, so that it's easier for you to understand. You can see this diagram a lot, right? First of all, we have this trend line analysis. See how the stock market dropped below the uptrend line. Then we have the moving average, which is the 20-50 moving average analysis. See it drop below the 50 MA, another warning sign. And then we have bearish reversal chart pattern analysis. Sometimes the stock can give us hint by showing us bearish reversal chart patterns like double top, head and shoulders, around the top, and so on. And when you combine all these three together, you now have a very powerful skill to learn how to spot stock market tops, or how to learn to spot the tops in the stock. You avoid all this crash when you combine these three analysis. So 3 in 1, just like the Father, Son, and the Holy Spirit. Yeah, I'm a Christian myself, and but we believe in the Holy Trinity. And someday, if I have time, I'll tell you. Someday, not if I have time. Someday, I'll tell you about what God has done for me in my life. But now, now, just remember these three things, right? When you combine these three, you have a very, very powerful skill, right, to spot the stock a top in the stock market. So if you have learned a lot of things and you've enjoyed the lesson here, please smash the like button, and also subscribe to my channel, right? Because this is one of the videos I make. I plan to make more videos like this, and please click the notification bell so that you'll be the first to know when I publish a video and the first to watch. So thank you for watching to the end, and I hope you have learned so much, and this will benefit you and be a life-changing lesson for you. And I'll see you in the next one.